Folks, welcome. Welcome to Thursday Night Stock Charts Live. This is where we review the up-to-date news and events that are roiling the markets. Happy New Year to all. We're also going to go over the weekly charts to see how we are beginning this usually a seasonally strong week out of the year. But right now, at this snapshot in time, it doesn't look all that well. One trading day left to go. So we are going to be going over the economic data first. We're going to talk about Meta, Mark Zuckerberg, and him selling shares. It is somewhat significant because he has done this velocity of selling in the past. And we'll talk about the after effects of what happened to Meta shares afterwards. I want to see, I have a video I want to bring up, and we'll go to that in a short bit. I want to wait for people to populate in here. Okay, get this over here. And we are ready to rock. Okay, so we're going to begin it off with economic data coming out this week. A mixed bag. And this is very, very critical because the markets have been pricing in interest rate cuts as soon as March. And we're going to talk about that more in a moment because something is changing there. So stick around. So we had economic data come out earlier this week. We're going to talk about ISM manufacturing in a moment. Job openings came in as expected. Fed meeting. This is where the market got a little bit wonky yesterday. You had a lot of conviction on the part of the Federal Reserve at their last meeting that they're cutting rates. Foregone conclusion. I never heard Powell so dovish before in my life. Now, all of a sudden, well, you know what? Maybe we're not that quick. Markets did not like that. Fast forward to today, and things become a little bit more in focus because I don't believe that the Fed minutes are indicative of what they spoke about. I think they're massaged to fit. They have another month of a view on the economy, and they're taking advantage of it, trying to set expectations. They're managing the market vis-a-vis modified minutes. So I think that they had a sneak peek at the ADP employment report. There's another geopolitical event, actually a couple of them out there that are quite concerning to inflation rising higher. So ADP came out today much, much better than expected. So we're going to get ADP. We got ADP today. We're going to get non-farm payrolls. It should be tomorrow, unless it's coming out tomorrow. Non-farm payrolls come out tomorrow. Watch for average hourly earnings. If we get a meet or a slight beat on the new jobs numbers, yet wage growth does not follow suit to the upside, markets may be able to rally, maybe. If you get a miss on U.S. employment after the ADP employment number, that'll offset ADP. Equities can rally. If you get a hot hourly wage and a hot hourly wage and a beat on the U.S. employment growth, that's going to be difficult for the markets to get over. Why? It's because that's going to put pressure on the Federal Reserve to say, oh boy, you know what? We really need to tamp down expectations of a rate cut. We'll still pause, but a rate cut we may not be able to do as soon as people expect. And that's the last thing the markets want to hear. Fast forward, doing a deeper dive into the economic data that came out. So we had ADP came out. Private payrolls increased 164,000 last month, the most since August. So it's not a insignificant number. This is a strong number, and we haven't had this strong of a number in a few months. Job gains are in leisure and hospitality, education, and healthcare. So this is a mixed bag. You really need to break this out. Leisure and hospitality are low wage jobs. Those are people that could be holding 2 or 3 jobs. Education, not so much. Good income. Healthcare, mostly if you're an RN or higher, you're making good health income. If you're a nurse's aide, my mom was one till the day she died. You're making nothing. You're making spit. I tried to make her quit. I took care of her. She didn't have to work. She liked to do it. So horrible wages. Anyway, I digress. God bless my mother. Rest in peace. Job losses in manufacturing. 4th straight month of manufacturing job losses. Wage growth cooled. If you want to know why we get that knee-jerk reaction out of the market today, was because this number here, wage growth cooled. That's what they want to see. Moving on to, this is from Liz Ann Saunders. I always had a crush on her for years. This is Liz Ann. There she is. Very pretty lady. So new orders component of the ISM used to be called Institute for Supply Management, manufacturing PMI, stayed below 50. Okay, this is where it gets important. In December, marking the 16th consecutive month of contraction. Only streak that lasted longer was historically in the early 1980s. Guess what? That's when the bull market began in earnest. It's one we enjoy to this day. So that's the economic picture. It's not looking good at all. And I would argue that it may get a bit worse. We'll talk about it more in a moment. Now, all this is having an impact on expectations for a Federal Reserve rate hike. Not for January. January's in the books. They're not raising rates. That's done. Probability of an ease is only 6.2%. No chance whatsoever that they're raising rates. Fast forward to March, 66.2%. Looks pretty good, right? We were at 78% just a couple of days ago at the beginning of the year. So this is beginning to trend down. And the markets don't like that. May. This was about 98%. Now it's down to 92.3. June should still be at around, this was at 100. Now it's off of 100. So you can see a little bit, even going out further into the year, where you're seeing a little bit of first half expectations of rate cuts begin to come in a little bit. Now, right now, this snapshot in time, May, June, if these numbers hold up, we're getting rate cuts. The however is that should we see signs of inflation creeping into the market yet again, well, then that's going to be a problem for the Federal Reserve, and they're going to have to make a decision. Do we throw the Biden administration a lifeline and try to salvage his presidency? That's probably an absolute. And that's not saying that they're supporting Biden. They're just supporting the guy that's in office. That's what they always do. That's how they keep the politicians off their back. So I think that they're probably going to allow for inflation to run hot, and they're going to allow the goosing of the equity markets is what they want to do to help Biden stay in office, or whoever's going to run in this place. The Federal Reserve's balance sheet. This is also a problem for the equity market. This is a stealth hike in rates, because the Federal Reserve, this is their balance sheet. The reason why their balance sheet got so big is because they were buying treasury bills. Now they are sellers. We dropped again week over week. This is a precipitous drop. This is pretty aggressive. We had paused here a little bit. I thought that we may be bottoming out, but nope, bottom fell out, and we continue to head lower. All the while, even though yields have pulled in just below 4% on the 10-year, the lifeline that the Federal Reserve has out to the regional banks still being used. Bank bailout fund usage, which began in March, just keeps soaring. Money market funds, biggest inflows since SV Big. That's that bank out in California that went boobs up. So all this going on, and we have equities that are sporting a PE of nearly 32 relative to the mean of 17.07. So we're in a precarious spot here. And I'm going to go over the tripwires for this market in a moment. I didn't go over comments because there weren't that many. And here they are. TZ Burton, welcome, sir. Happy New Year. Yeah, I know. Quiet night. I sent out the email, and very quiet tonight. Seymour Rivers, thank you, sir. Appreciate that. Yodi, I can't believe another Thursday night show with the Contrarian Trader. Hey, Yodi, thank you, man. Jody, welcome. Happy New Year. Okay, so continuing on, we have an issue. This one, I was at the gym early this morning, and this one really knocked me for a loop. Good morning, everyone. Walgreens, one of the world's largest pharmacy chains, just cut its dividend by 47.9%. Here's the kicker. This ends a 48-year streak of consecutive annual dividend increases. It is no longer a dividend aristocrat. It was previously the most generous dividend payer in the Dow Jones Industrial Average with a yield of 7%. Stock is now down 31% in the last year and down 6.19% in the pre-market. This with Rite Aid, one of their largest competitors, having filed for bankruptcy. So they're not seeing a dividend off of that. They're still feeling the pinch, whatever's pinching Rite Aid, which has massive debt. I don't know what the debt is on Walgreens, but Rite Aid has a tremendous amount of debt, and their business is hurting, probably due to the online pharmacies that are out there. But I believe Walgreens is in that business. So not good news. And this is not a trend you want to see continue. They are liquefying behind the scenes. You mean they're not paying out their dividends to take care of operations, retired debt, and whatnot? I'm assuming that you're referencing Walgreens, right, Jeff? Okay. In the members area, I could go in there. I could show you for several weeks now, ever since the first threat against a tanker, or it wasn't a tanker, it was a cargo vessel in the Red Sea got attacked. I said, this is nothing yet, but it could be something. Watch for the trend. And we have a trend, and it's not a good trend. And I have satellite visuals to share with you. So U.S. admits no signs of abating as Houthi rebels escalate Red Sea attacks, deploy suicide drone boats. This is no joke, folks. This is no joke. And here's what it looks like on the Red Sea right now. Typically, right here, you have the Suez Canal right up here. So if you have vessels coming in from the Indian Ocean, they'll come up through the Red Sea into the Mediterranean vis-a-vis the Suez Canal. Vice versa, you have oil shipments coming out of Saudi Arabia, coming down through the Red Sea out and into the Indian Ocean. You go through uh, the Red Sea, but you have to go through this pass here, this very tight pass, and that's where the Houthi rebels are, and they're attacking ships, and they're doing a good job. And you can see here this satellite imagery. All these blue dots are ships. Those are their geo trackers, and there are no ships. There are boats in the Red Sea, not commercial shipping vessels, tankers, container ships. Those are done. I'm sure Lloyd's of London and all these other big carriers are out there that insure these vessels are saying, you're not going through that. We'll take away your insurance. And all of that traffic now needs to go from not going through the Suez Canal into Europe. They need to go down and around the Cape of Good Hope. Do you have any idea how long of a trip that is? They built the Suez Canal 100 years ago for a reason. They didn't even have the technology. It took them years to do because they didn't want to make this trip. This saved a tremendous amount of time. Now, all of those cargo ships have to go around the Cape of Good Hope. Two things here. One, what if, and notice there are no boats here in the Persian Gulf either. What if they shut off the Straits of Hormuz? Then you're going to see $150 barrel oil overnight. Then you're going to see this equity market take a nosedive. But we're not there yet. Let's still talk about the Red Sea. What is it doing? Well, what it's doing is that it's driving up. I replied to this. I spelled warned wrong. I have to proofread my spelling. It's embarrassing. I have warned about the Red Sea issue for weeks now. I said it would create inflation, and here it is. No wonder the Federal Reserve minutes stepped back the odds of an early ease yesterday. So here you can see it. Carriers divert $200 billion in trade from the Red Sea due to Houthi militant threats. Shipping a 40-foot container from Asia to Northern Europe now costs $4,000, up 173%. Supply chain issues are back. Will inflation reaccelerate? He gets it. Important to know, cost of shipping from Asia to Northern Europe and to Mediterranean costs 2 times more than the levels in January of 2019, but are still below their peak during the pandemic. Good to throw that out there. We don't want to be hyperbolic. Good stuff. So shipping rates are moving up higher. Why will they go higher? Well, we already admitted no signs of abatement. Why else? Well, at some point in time, they're going to have product over here in China, in Indonesia, in India, Vietnam, Singapore, Malaysia, all getting built up, and they're going to be stacking up at the docks. Why? Ship shortages. What happens then? Prices go up. If this is not resolved, they have to continue going around the Cape of Good Hope, and this is a major, major problem. What happens historically when you get shipping costs of dry bulk shippers? Forget about tankers, oil tankers, LNG tankers. This is the Baltic Dry Sea Index. This is a measure of the cost of shipping. And you could see that this is actually running contradictory of what I wanted to talk about, because this showing is down. But my point is that if you see a contraction in shipping costs, meaning they come down, Whether that could be that they're taking shipping offline or production offline, manufacturing offline. This is the S&P 500 up here in blue. And you can see that it is correcting. And for whatever reason, the Baltic Dry Sea Index is coming in despite the fact that we have container rates which are rising. I don't understand that yet. I need to do more research as to why that's happening. But either way, this is as of December the 1st. This is January, this small dot here. We are putting in or just at December lows right now. So buckle up if we begin to break down further here. That could only mean that we're seeing a contraction in manufacturing because people don't have a lot of optimism that they're going to be able to ship their goods in a timely manner. And they're worried about having inventory. And if they have inventory, do they have to cut prices later on down the road? So you go to inflation, then to deflation. This is very complex. Michael, welcome. Happy New Year. Jeff, central governments are liquefying. I posted a couple of videos. Oh, I got you. Yep. I understand. Thank you. The waters around the Cape of Good Hope can be treasured. Yeah, absolutely. Venezuela is causing oil issues too. Well, oil is not necessarily a problem right now. We have the shale producers that are producing quite a bit of oil. They just can't expand much further on that production. So, we're going to take a look at oil prices in a moment, but this is a very complex issue that I don't think is getting the respect of the street yet. Maybe they are waking up to it now. I'm not quite sure. But you have to think, if you're Jay Powell and you're seeing this happen, spiking container rates, supply chain disruptions, well, if you ease money, then yet again, you're back in a situation of having cheap money in the hands of people that are going to go out and buy stuff. What does that mean? Shortages. And that means inflation. Now we're going to talk about Meta. Did I share this? There we go. That's better. If we go from inflation to deflation, would that? Yes. Yeah, that's not good for gold. Right now with gold, you want to see stagnant growth, which is pretty much what we have, and a bit of inflation. So I still think the environment's pretty good for gold right now. In fact, we bought more this week, quite a bit more. Are you buying the I saw the I think it was top shippers. I'll go to this in a moment since let's stay on topic here. This used to be the symbol. I don't know if it's still the symbol or not. They change symbols all the time. Boat. Thank you for that. Sonic shares global shipping ETF. It's having a heck of a month so far, really 7%. So a pretty good looking chart here. Yielding nearly 13%. Let me save this. So it's extended relative to its third standard deviation Bollinger Band. I don't know whether or not I'd be a buyer here at these levels. Here's your uptrend channel. It can go higher. As this matter unfolds with the Red Sea, it could be a major, major problem moving forward. So this is inflation. The fact that these prices are moving up higher is inflation. It's what it is, and it will find its way. The company's not going to pay for it. We're paying for it. Thank you, Mark. Appreciate that. Hey, Wendy. Hey, gang. I normally catch Bob on the replay. Bob, you make a lot of good points. Thanks for the commentary. Thank you very much, Wendy. Appreciate it. Thank you. Thank you for your engagement. Okay. Moving on to this is McCullough off of Hedgeye. He could be hyperbolic, but he has his points at times too.
Zuckerberg sold $500 million in stock yesterday. When I started on Wall Street, a $5 to $10 million insider sale would get the whole street going, right? Then it became 50 million. This is 10 times that. When was the last time Mark Zuckerberg sold stock? Do you know? November of 2021, the absolute all-time high of the mother of all bubbles. Mark Zuckerberg.
Okay, so I went through the filings, and correct. Back in November of 2021, Zuckerberg, to be specific, was the 8th of November 2021. Zuckerberg had done quite a bit of selling. These numbers are just the tip of the iceberg of the selling that he was doing back then. Let me see if I can go back further here. You could see these numbers that he was putting up aggressively through October. This is all him of 2021. Billions upon billions upon billions of dollars. September, let's do another page. Again, September, billions upon billions of dollars in sales. This is probably more than what he sold now. A tremendous amount of selling into July. So he has one of his VP and general counsel selling a lot of shares too. I think she's also selling now. So fast forward, he hasn't sold any since November the 8th of 2021. Fast forward, now she's chief legal counsel, and she's dumping shares as well again. He's dumped about $500 billion worth of stock. Not his greatest sale of all time, but something that gets you to take notice. So let's take a look at what happened the last time that Zuckerberg sold shares. That was back here in November. Now, Keith McCullough just said that was the height of the market. I don't think that's right. It wasn't even the height of Meta at that point in time. The height of Meta was back here in September. But be that as it may, we're splitting atoms here. His point is well taken in that was the lower high. And then in January of the following year, we broke to new lower lows and we had this dramatic sell-off. Now, looking at this chart right here, right now, I'm trying to say, is there a reason to go shorting these shares right now? I'm hard pressed to do that, at least from a monthly basis, a weekly basis. We're very extended on stochastic, but you could stay extended. We're off the lows of the week. Let's do a deep dive into the daily chart. Now, what I'd be looking for here on Meta. Let's go to my saved version. That's already all marked up. What I'd be looking here is for this to occur. We break out, right? The prior high was what? 361.90. We tiptoe back up there. And then, as the old adage I always like to say goes, the test is always at the top. Do we break out? Or do we double top out, putting in a lower high? And if we put in a lower high, do we break down below 340.01 and close there? Most importantly, close there. We'll be eyeballing it as a short. I'm not going to ignore the fact that Zuckerberg is selling shares, but the guy's got a lot of shares, and maybe he's building a bunker after all, and he needs capital to do that. And I'm not even joking. So I don't think that in and of itself is a reason to say, okay, let's go in and allocate a short position to Meta. I don't like the setup yet. I mean, it's still in a strong uptrend. It's pulled back. This could be setting the stage for another rally and new all-time highs. I don't know. I'm not that smart. But what we're looking for is the setup. Right now, we don't have the setup. We may have one. We're going to keep an open mind. If it breaks out, maybe we'll buy it. If it puts in a double top and it breaks down, maybe we'll short it. Ideally, we short it. The thing to remember is that this blue line here is here for a reason. And this ought to be a range, to be honest with you. Because I had a position on here. What did I do? There we go. I had a position on here several months ago, and the question was, does it break out above 300? And you could see it acted as resistance for quite a while. Then it did, and it broke through very, very powerfully. And here you had a massive bull run on Meta. So the thing to keep in mind here is that this range is like a brick floor, if you will. So don't ignore this. 310, I'm going to put another line in here. 310 to $300 per share is like a brick wall. Don't go shorting into it. You want to be in this position quickly so that if you get down to that mark, you cover and get out. Wait and see whether or not it bounces. I guarantee on the first go around, absent a geopolitical event, Meta is going to pop. It's going to pop up higher off of that support level. I spent a lot of time selling premium in there. I know. I was watching it every day. So break and close below 340.01. Meta becomes a short after putting in a double top. That's my call. And taking a look at seasonality on Meta. Going back 12 years, February is the worst month for Meta by far. Something to keep in mind. And taking a look at a weekly chart, this week is very strong, and you can see how we begin to drop off quite a bit. So that's Meta in a nutshell. I wouldn't go shorting this right now. I don't think that we have enough technical data. We have enough insider price action going on here that it's concerning, to say the least. However, we don't have a break yet. We don't have the setup. Let's not go listening to Twitter feeds or whatnot that we should be shorting the stock when it's just not time yet. What about puts for Meta? Absolutely. Absolutely. I would buy on Meta. The trade I would think about first is I would go with a bear put spread, also known as a debit spread. I would buy let's say 80 delta, 70 delta put, and I guess that would be around what? I'm going to throw a number out there. I'll probably be off on it. Let's say a 370 put. So that's a deep in the money put. But simultaneously, I would be selling a deep out of the money put, probably right at that 310 strike price. So that way, I get all the rewards of the downside move to 310, and I have a exit strategy. I can get out and book my profits. I'm not going to fight a war 310 to 300. There's way too many buyers down there. If we have a geopolitical event, a catastrophe in the stock market, can it slice through it like a hot knife through butter? Of course. Absent that, I would use a debit spread, a bear put spread, whatever you want to call it cupcakes, have a hedge on that trade. You're welcome, Pete. Wendy. I always take chart requests and I'll stay all night long from members. So absolutely. If you're not currently a member, please take advantage of the 14-day free trial offer. Link below. And yes, Danny, please smash the like button. And Wendy, we're going to be going over silver in a moment when we go over the charts of the week. So let's take a quick look. It's 6:37. We have some time here to go and take a look at how are we poised to close on the week. Now, I developed a new series of charts. I think I have it up here. Where is it? Where is it? Where is it? There we go. We're going to be talking about this in a moment. Yes. Okay. So let's begin. So these are the weekly charts. It's Thursday. This is where we begin about thinking about next week. We don't think about next week on Monday morning. We think about it right here, right now. How do we want to position ourselves moving into the new trading week? This is not a game of, this is no disrespect to day traders. I have a lot of respect for day traders. It's very difficult to do, but this is not a game of day trading where you want to set up your week as a swing trader by waking up early and setting up your trading plan. You want to do that a few days in advance of the new trading week because you want to get a feel for how the week is closing. Have we put in a new monthly high? In this case, have we put in a new weekly high? These are the questions that we want to address before going into the new trading week. What are you going to talk about in a moment? Weekly charts. Weekly charts. How are we poised to close out the week? This gives us insight about how we want to be positioned going into next week. Remember, one trading day left to go. A lot can happen. So let's begin with yields. Yields are up on the week. We kind of expected this because yields were so suppressed last week and the week before. I kept telling members, listen, this is not going to resolve itself well. We're going to get a rally because these stochastics were so oversold, and now they've ripped up. We've hit a little bit of resistance here. I'm impressed by the fact we were able to bounce back today after yesterday's reversal day. Do I think that yields are going straight up? No. Could the jobs numbers tomorrow have an impact on yields? You bet your bottom dollar it does. If wages come in hot, if jobs come in hot, yields are going up, stocks will probably go down. Probably. Depends upon the difference in the rate of change. Bitcoin. We own it. We're enjoying it. New yearly all-time, yearly 52-week highs, not all-time highs. That's my positive mental attitude getting the best of me. Bonds. So the reason why I think that we're probably going to move higher on yield short term is because of the price action of the TLT. Now, this is a weekly chart. And as I said before, we have one trading day left to go. The however is that when you take a look at a daily chart, yesterday, we already owned TLT. And yesterday I saw this bullish reversal bar and I said, you know what? Pardon me. You know what? Let's nibble a little bit more here because it looks like you have a reversal bar. I would stay small, which we did. And you should see an upside move, a follow through. That didn't happen. We gapped down today, and I don't think we broke to new daily lower lows, but this is very, very bearish stuff. So this leads me to believe that we have more pain to go on the TLT trade, and momentum is measured by stochastics and by RSI are going in the wrong directions for bulls. So I'm saying this as an owner of TLT that I wouldn't go buying more tomorrow. It's not time yet. You're probably going to get a little bit more pain, but there will be greater opportunities to add more. Because if you believe, as I do, that the yield curve is going to steepen, and we're going to need to go over that in a moment. If you believe the yield curve is going to steepen, then you had better be positioned for a safe haven play in the bond market. And we are still down on the week. So those are bonds. Now, tips are down on the week as well. The dollar. I spoke about this last week with members, perhaps even, well, we weren't live on Thursday, so I wouldn't have done that on Thursday Night Stock Charts Live. We were in a descending wedge formation, and I said on the weekend commentary, I said, look out, they're going to probably try to take this higher. I did not anticipate a big gap out of this declining wedge formation, but we have it. And this is why I'm not overly aggressive with buying the gold stocks today or yesterday because of the strength in the dollar. This can go up higher. Now, I did go opening or adding more to our gold position today, long-term call options going out December of next year, or this year. Because if we do get a steepening of the yield curve, gold usually tends to go up. May take an initial dip, but then it goes up. And gold stocks, it takes a little bit longer to recover. So I did add to our gold position this week, electronic gold using call options. Now, does this rally in the dollar have legs? I don't know. The euro had a nice rally here. We pulled back. We're off the lows of the week. That's not bullish for the dollar. The yen had a nice run, but then collapsed this week. So can the dollar continue up higher with a rising euro? It's difficult. It's difficult, but it can do it. The thing to keep in mind is that the euro represents 55% of the Dixie basket. So that's what the dollar is measured against, the Dixie basket. Euro is 55% of that. So you need Swiss franc to be moving up higher, which it is. Aussie dollar, Canadian dollar, etc. Now the VIX. This is where things get a little bit hairy for bulls. Now, the VIX has a new weekly higher high as of the close of business today. But what I want to focus on is how is it performing relative to the S&P 500 on a more granular basis, on a daily basis. We'll go to that chart in a moment. But looking at the closing chart here, we have declining ceiling at the 50-day moving average. That's a little bit of a pressure on the VIX, but momentum as measured by RSI and Stokes is building. Now, VIX versus the S&P 500 weekly view. The VIX is clearly outperforming the S&P 500 this week. And you may be saying that's a no-brainer, Bob. VIX always trades down when the S&P 500 is up and vice versa. That's not always the case. It's not 100% absolute. So you can see here that it's clear and defined that the VIX is near the highs of the week, and on a daily time frame, looking pretty darn good here. There's more upside on the VIX from here relative to the S&P 500, looking pretty bullish. Franklin, hey, brother. Gold, Bitcoins are safe havens too. Not Bitcoin. Bitcoin is yet to be proven as a safe haven. So be careful there. I want to take you back. I'm glad you brought that up. There are no bad statements or bad questions unless you make fun of my hair. That's a problem. I'm teasing. But I had a chart up here earlier, and I want to go back to it to address that statement, because when I was taking a look at the chart of Meta earlier to prepare for the show, I said, you know what? Bitcoin is behaving really, really well right now. What did it do back then in 2021 when the market went belly up, Meta went belly up? How did it perform? Not too good. Not too good. Bitcoin trades as a risk asset. So here is Bitcoin. Here is S&P 500. Here is Meta. So you can see that the S&P 500 peaked out here in December of 2021. Bitcoin peaked out in November of 2021, a full month before. And it traded along with the equity markets and it recovered with the equity markets. So be careful of that concept. Bitcoin is yet to be proven as a safe haven play. And if you're wondering, hey, listen, why do you buy it? The reason why I buy it is because in case I need to bribe a border guard, and I'll have Bitcoin on me. So that's why I have it. I'm worried about central bank digital currencies. How do you buy gold, and which miner dips look like the best? Which I like is looking at a CDE. All right. You can use GDXJ depending upon your risk tolerances. GDXJ is more of a junior miner, more volatile than GDX. I trade GDXJ in my retirement account, and I have NUGT in my trading account. How do I buy gold? Normally, I only buy physical for my core portfolio. But right now, I do have call options on for GLD going out until December of 24. So just be careful with this Bitcoin thing, okay? It's behaving well, but be careful with it. I think it's rallying more on the halving or the nonsense with that story, as well as the ETF coming out soon. So that's the why behind Bitcoin at current. It's becoming more mainstream, and perhaps it will become a store of value at some point in time. I don't know, but historically speaking, it has not behaved like one during times of crisis. All right, to the equity markets. Dow Jones Industrial Average. I just bit a piece of ice and I have a cavity. We're now down on the week. We're short of the diamonds, the DIA, as of yesterday, and we added more to it today. So I shorted yesterday. They rallied them today. They faded the day. Stokes are extremely overbought and declining now, correcting, as is RSI. ADX is at levels. This is an overbought indicator. Any read above 55 is very overbought, not extremely overbought. For the Dow Jones Industrial Average to be above 60 is ridiculous. Let me illustrate. Let's go back in a time machine and take a look at what happened the last time. We'll go back 5 years, a respectable number. Let's increase the size of the chart. And we stroll down memory lane. When was the last time ADX was this overbought? Oh, gee. Going back the last 5 years, it hasn't been. We are way beyond the peak back here in March of 2020. And you can see what that hellscape looked like. So here we are yet again. I'm not predicting a crash here. It's just a short. I could be out on Friday, could be out on Monday, Tuesday. It's not a long-term bet. But we are short of the diamonds due to a short-term overbought condition. Simple as that. No conspiracy theories here. Spiders, S&P 500, retesting a breakout point from last week. If we don't want to see it close down below the support level. That would be a major, major problem, technically speaking. Daily view. We're right there, man. They tried to rally it, rejected. Volume is pretty good today. Trip Qs. The gap down on the week. Very weak price action today. NVIDIA was up, but very weak price action on the week. Microsoft week. Makes sense. I just figured people will also need Bitcoin for the same reason. Yeah, I think that's going to be more. I think it's going to be more if you have the threat of a central bank digital currency. And that's really the only reason why I have it. Otherwise, I would just have cash. But that's why. Yeah, Bitcoin's following the market to a certain extent, but it's right now it's outperforming the market because of the cycle, the news cycle. If they get the approval, maybe they already did. When they issue that ETF, that could be a sell the news event, but it looks as though it wants to go higher. I mean, it's a really strong chart. So they have that halving coming up. I don't know all that much about that stuff, so I'm not going to pretend I do. But apparently, that's got a lot of people excited. It allows for Bitcoin to move up higher just prior to that occurring. This time in the halving is usually pretty good for holders of Bitcoin. Technology gap down this week after hitting all-time record highs last week. Semiconductors gap down. So clearly what we're seeing here is a profit-taking week. I'm not predicting a crash. When I would be predicting a crash in the equity markets is if I saw the yield curve spiking up higher, uninverting, yields pressing up higher, or worse, yields crashing through the floor. That's a sign there's something very, very wrong out there. So the prelude to a crash is our yields moving up higher, forcing equities lower. Then all of a sudden the floor drops out on interest rate prices because something's very, very wrong out there. This unsteepens, and all of a sudden the Federal Reserve comes in cutting rates. Why? We'll know by then why. And apparently right now the market is pricing in knowing the why in March. Because usually when the Federal Reserve cuts rates, the economy is in trouble, big trouble. Biotechs, the biotech sector, or at least the pharma names, have been doing very, very well so far this year. I have a short position now on Eli Lilly. That backed off the highs of the day. Let's check in with that. I'm now profitable on the trade. Still up nearly 5.5% on the week, but I shorted it yesterday. Yeah, nice. Nice bearish reversal bar. because of this. An alert fired off. They ripped it through the ceiling. We went short. And I'm going to let this go. I think there's more downside here to be had on Lilly. We sold premium. We don't own the puts. We sold the calls. All right, LABU Biotech Leverage ETF. We have a position on here. We own the common. That's in my core portfolio. We have a strangle on right now as well. So we're generating daily cash flow off of that. Consumer staples. Started off the year good. They pulled back some. We did some nibbling in the core portfolio on Philip Morris. That's yielding over 9.25%. But we have a lot of cash in that portfolio. Staples looking not good right now. Discretionary is not looking good at all. How's volume on the week? Not horrible. Forget about EDC. This has China. We don't want anything to do with China. Wrong symbol, Bob. There you go. So we have a small position here. This is down on the week. The reason why I didn't go buying this more recently is because I was worried about a rally higher in the U.S. dollar. We got that rally. Emerging markets trade inversely of the U.S. dollar. Never forget that. Always know your correlations and your inverse correlations. So as long as the dollar moves up higher, this is going to continue lower. So I want to be a buyer, but I want to have capital on the sidelines when we get a real big sell-off in this market. So I have a lot of cash. Right now it's earning over 5%. What's wrong with that? No risk. Energy. It started off the week a little bit rough, but then it got strong. Actually, no, it started off the week strong. Oil started rough, then gained strength. And yeah, wow, look at this reversal bar. You're going to want to avoid these names right now. I mean, if these names can't rally in an environment where you have Houthi rebels blowing up container ships in the Red Sea, I don't know what's going to make them. Let's take a look at crude oil. Weekly chart. Crude is up 0.75%. Doji star formation, a sign of indecision. One trading day left to go. We'll go over this chart on Saturday, and we'll revisit it on a closing basis. Yeah, not good here. Jury's out on oil and on energy stocks. I wouldn't buy them. I wouldn't short them. Gasoline prices, Doji star formation. Curious. Gold, struggling here. Do I want to put a hedge on? I think we're okay. We really need a rally here on gold. We need a strong Friday, or else I may need to hedge that call spread I have on. Let's check out how we closed out the day. 30-minute view. Not looking good here. Nobody could say I come on here and I pump my own stocks, or in this case, commodity. I'm not loving this. That's not a great close. All right. Let's go to AGQ for Wendy. So silver is, on a relative basis, relative to the price of gold, is extremely cheap. The gold-silver ratio is just ridiculous right now. And I wouldn't buy more of this right now. I think that there's a very good chance this goes lower going by the weekly chart. So we remain in a downtrend here. We nibbled a little bit more on silver last week. I'm not looking to average down on silver. If they really beat it up hard, I'll step in then. But I need to get a value to average down. Not bad daily chart. I think they're going to pop this. What I would do is, if you want to consider selling puts, average down your basis cost, I'd be okay with that. Volume is very heavy. Lots of distribution here on AGQ. Lower highs on Stokes. You're seeing this on the gold stocks as well. This is not good price action on your momentum indicators. Lower highs. This is after, at least on, not so much on AGQ, but on the gold stocks, we put in higher highs. Yeah, we couldn't put in higher highs on the stochastics. So here's your higher high on price relative to December higher highs versus earlier in December, right? But the Stoke here is lower than the one here. That's not good price action. That's a bearish divergence. You don't want to see that. So what you want to do in that scenario is get your crayon out, memorialize it, and don't fight it. Bearish divergence. Okay? Don't fight it. Sell puts, wait the storm out. I wouldn't be a buyer right here, right now. All right, we'll do a couple of chart requests. I'm going to check the members area. I should have this ready, but I usually don't. Okay. All right, we did. Okay, we don't have much to do. So, yeah, I have a minute for you, Jody. And, oh, look at this from Twitch. Oh, God. Spammers. This is why I do the private live streams. All right, Para, we're going to leave it off with Para. You're welcome, Wendy. Paramount Global. I can tell you right now, I like the chart. So we had a nice rally, orderly pullback. We bounced off of the VWAP. This is the 20 period moving average. Looks like we're going to hold it. One trading day left to go. All right, so I'd be a buyer on a breakout above 1475. You have your 20 period moving averages there. That's the EMA, not the, I'm sorry, that's the SMA, not the EMA. You may want to wait for a close above that 20 period EMA. Allow it to consolidate there. Sometimes it takes a rally into it and it gets rejected, just like it did back here and here. So you want to get a close. That's been acting as a declining ceiling on the shares for a while now. So a close above the 20 period EMA, that would have me as a buyer. I like the weekly chart. I like the monthly chart. So looking good here. Up volume decline versus yesterday. That's not good. So just be careful. Wait, have patience. Wait for a close above that 20 period EMA. Then I would start building a position. You're welcome, Jody. Folks, thanks for being here. Like, subscribe, and join our email list, link below. And I will talk to you soon. Have a profitable trading day tomorrow and an awesome weekend and a happy new year. Be well.